Okay, we are live, Karan. Thanks for being here. Yeah. So we're doing our first Q&A session together. We've got a fair number of questions. Looks like on my end, I had about 15 questions or so, and I think I looked at yours and there were like 19 or something. Is that right? Enough.
Yeah, 19 questions.
Enough to fill up some time here. So, yeah, we are live.
Should we wait till?
There's not anyone here yet, but it's recording. So I say we just bite off a few questions and hopefully people kind of come in as we're going.
Sure. You want to start with your questions and then we'll go to mine?
Maybe we'll go back and forth. How's that sound?
Okay, sounds good.
Okay, so the first question, a bit of a longer one. How intense, in quotes, is your traditional stock market week? Do you invest several hours a day for research, or do you only get active via created Google alerts? Jack, dive the world. All right, we got people coming in. The point I want to get to is stock picking, keeping up with the stock market can be a real information challenge in terms of work, in terms of work-life balance. How is your approach and how do you escape the struggle? So it's really kind of like, how do we spend our time each week in terms of finding stocks to invest in, managing our portfolios? So curious to hear from you on that, Karan. And I'm happy to go.
Go ahead. I mean,
all right. So how intense is my traditional stock market week? It's really not very intense at all. I really let my curiosity just kind of take me places. The things I'm currently investing in, the things I really like to invest in, are things that don't really require a lot of kind of continuous monitoring and input. I'm trying to bag these kind of 10-year or even longer bets that I don't really want to be looking at every week or every couple weeks. So it's kind of a passive approach to the active portfolio is kind of where I'm at with that. What do you think about that, Karan? Where are you at?
Pretty much similar sort of approach.
Yeah.
Like, I see people who are like glued to their screens all the time. I mean, like people who are like doing day trading and stuff.
Yeah.
I'm like, how is that a sustainable lifestyle? People make a career out of it. Like, kudos to them, but like I don't know. To me, it doesn't make sense. Like, if you kind of buy into something that makes sense to you, if it falls, like Seritage, it fell 18%. Like, I don't know, were you worried? I mean, of course, knowing the CFO is going, but does it, like, do the assets disappear? Not really. So, we have nothing to worry about. Right. If we know the businesses. So that intense day-to-day work, it doesn't exist as much, I think, if you're following the value sort of approach.
Right.
Yeah.
Yeah, it's funny when Seritage drops, whenever it drops more than like 10%, I get all these messages like, what's going on with Seritage? And I'm like, well, first, I don't know. Second, I don't really care. I mean, it's kind of a big deal when the CEO leaves. So that was interesting to dig into a little bit. But in general, I'm not tracking the price, okay? Because that drives me crazy. I mean, it's just, there's so much whiplash when I'm trying to figure out every little tick in what's moving the price, right?
Yeah.
And it's just not knowable at the end of the day. I mean, some things you can kind of figure out, okay, this was likely as a result of this, but there's a lot behind the scenes that we just don't have the ability to know.
True. At least not so early into the business. Like, you actually understand the business once you're in it. Like, and it takes sometimes months, sometimes years. Yeah.
Absolutely. Cool. Well, I feel good about that question. You want to pop out the next question, Karan, from
Sure.
your viewers?
Okay, the next question is from Brisingo. It's, can you explain what would happen to our investments if a brokerage account went bankrupt? I don't think it's... Yeah.
Okay.
So, I mean, I think it just varies from brokerage to brokerage, but I mean, if you hold the securities in your name, and as long as, you can kind of transfer them out, it doesn't matter where you hold it. Essentially, like your brokerage can switch. It's no issue. I think that's pretty much it. Right?
Right. The brokerage is really just the intermediary, right?
Yeah.
Yeah. Great.
That's it.
Straightforward one there. So the next one is from Enrique, and you guys in the chat, feel free to ask questions as well. I'll give you guys preference since you're here in real time. So this one's from Enrique. Thoughts on Tesla and wondering when you'll take the dive. Oh, everyone wants to talk about Tesla these days, and Bitcoin, of course.
Yeah.
And this person thinks it won't get any cheaper. So, kind of nudging me to take the dive on Tesla. It's funny. I have a friend who, I was talking to her this morning, and she said she got into Bitcoin like a couple days ago because she doesn't want to miss out. It is such a strong thing, Karan, that fear of missing out.
Yeah.
And it's so easy to feel with Tesla too, right? Because I mean, the story behind Tesla, it's such a compelling story for like changing the world, shifting from this, these gas guzzling vehicles to these, vehicles that run on bunny farts in a sense, right? But, my thoughts on Tesla, I have the same thoughts that Pabrai, Pabrai shared about Tesla a few times in talks. And he says, he's definitely watching Tesla. It's a fascinating story, but he has no compulsion to do anything with Tesla, either on the long side or on the short side. It's just
Munger has the same view.
Munger has the same view, yeah. So that's my take on Tesla. It's funny. I follow a professor, Aswath Damadran. You're probably familiar with him. He valued Tesla a few times in the last couple of years.
He bought right at 180, 185.
Yeah, he bought in, I think, around 200. It might have been 180, somewhere around there. And then he sold when it got to like 650. He was feeling pretty good about himself. And of course, since then, it split? Was it a 5-way split?
5 to 1, yeah.
And now it's at 900.
Yeah, around.
So it's just insane.
880 or something.
It's just insane what Tesla has done. So, when I look at Tesla, you hear about Michael Burry shorting Tesla.
Tesla souffle, yeah.
Tesla souffle, that's right. I have no interest in going anywhere near Tesla, either buying long or I definitely wouldn't short the stock. I mean, that just, I don't care how high it gets. I am not interested in shorting Tesla. So that's my take. I'm not going to touch it until it comes back down to, I don't know, maybe $50. I might be interested.
So there is a price.
There is a price. There's a price that I would be interested in Tesla. We are very far from that price.
Yeah. And I don't think, it might, you never know. It might go back, but
it's possible.
Yeah. So Tesla was actually the first stock that I kind of bought, like the individual stock.
Wow.
It was a Tesla stock. Yeah. So, and I bought it around 250.
Okay.
Pre-split. So that 250 would have become like 4,500. So huge return, right? But so when I bought into it, that time I had no idea, like I didn't actually sit and value it.
Yeah.
I just said, okay, I'm buying Tesla. It's like I've just been a fan of the company ever since like literally 2012.
Yep.
Because I was studying electrical engineering, so batteries have always been kind of interesting to me. And so I just kind of was all about Tesla and the battery technology that they're getting into. It seemed really interesting. So I bought the stock. That was the first stock I got. And then when I did the valuation, I'm like, okay, this makes no sense. And I got out at like 400. And I felt pretty good, I'm like 250 to 400.
Sure.
Great return. But yeah, same thing as I guess what Professor Damodaran had, but
yeah,
I got in later than him, but got out earlier than him. So.
Right. Yeah, so I feel good about that.
Great company, though. Great company. Yeah.
Great company. Agree.
Like
all right.
if there's someone who can achieve it, it's probably Elon. Like he's literally gone from industry to industry and just really changed things, like financials with PayPal, SpaceX. I don't know. I'm a big fan. Like I'm bullish on Elon, but on the stock, I don't know. Yeah.
Yep. I'm in the same boat. All right. Why don't you throw out a question, Karan?
Oh, okay. This is a bit of a loaded question. Yeah. So investment journey, how long? Educational background, short or long-term goals with YouTube or in your investment life.
Okay.
So it's a lot of things.
A 3-piece. You want to go first? Or you want me to take it?
Go for it. Investment journey, how long?
So how long? My investment journey hasn't really been that long at all. So I think in 2015, I took a training through Rich Dad Education, right? Robert Kiyosaki. And, I thought I wanted to go into real estate investing. And I did that for about a year. I was doing wholesaling, hitting the streets, sending postcards. It's really exhausting. I got one deal out of it, which, better than no deals. But what I learned through that process is real estate is, I feel like you need to be an extrovert. You need to be kind of a schmoozer to do well in real estate. It's really a relationship business. And that is not me. I would rather just kind of analyze, me and my computer, or me and a book, and figure it out that way. This kind of relates, which is the next question. What's my background? So I was trained as a mechanical engineer at UW-Madison. Did engineering for a short while. The job I got stuck with was just so boring. And I was just like, similar to Monish Pabrai, if you ever wake up in the morning and you just don't feel like getting out of bed, it's time to do something different. So I actually got deeply into like sustainability, permaculture, which you've seen my my bigger Instagram.
Talk more about that. Like that is super interesting. Yeah.
Yeah. Kind of back to the land, homesteading, all of that stuff. It was really about self-sufficiency, which has a lot of overlap with investing, learning how to be self-sufficient from the land. So anyway, the short answer is mechanical engineering background, which, engineering, there's a lot of great investors who, have that kind of engineering roots. Pabrai did the computer engineering. So it just, it's an interesting game to me. It's a game that I feel like I can win. So those are important aspects.
The odds are in your favor. I mean,
they can be. They can be.
I mean, the market's gone like this since what, 1980, I would say.
Yeah.
Since even just after 29, I mean, yeah, since the 30s, pretty much it's gone. The graph.
Yep, we've had some tailwinds. Was there a third part to that question? Oh yeah, the YouTube channel.
Right. Short or long-term goals with YouTube or in your investment life.
I feel like the goals with YouTube, I'm already, it's already so great what's happening with the channel in terms of, it's really about me learning how to become a better investor. And there's two ways that I've really felt that through the channel. One is, when I have to teach something, when I have to share what I think I know on a certain topic, it forces me to really get clear, if there's holes and fill those. The other piece is the viewers, my subscribers, my viewers. I get so many awesome comments on each video that makes me look at things in different ways, and it just forces me to grow as an investor. So it's just been a fantastic journey.
It's really good. Yeah, the comments are really good, definitely.
Yeah.
I really appreciate stuff from a lot of people. I think we have a lot of commenters, like even Dive the World, being someone who keeps,
absolutely.
He's got good down.
I really appreciate his stuff. He's Yeah, clearly got some experience.
How
about for you?
Yeah, for the investment journey, yeah, I mean, it's been around a few years now, like around 3.5 years or so. Yeah, thing is, like, I've been in, so I did electrical and then I did a degree in finance. I kind of left electrical. So I've been learning about finance and academic finance basically since like 2015. And that's when I really got into it, started picking it up. But actually, like, investing, like with real money, yeah, that was around 3.5 years ago.
Okay.
And started off with ETFs, just trying to figure out how do you buy, how do you sell, what it means to actually own a stock. And then, got into individual stocks and yeah, that's been the thing ever since.
So right off the bat, you got indoctrinated with the efficient market theory. Is that what I'm hearing?
Yeah. I mean, I feel like I'm still not like there 100% with individual stocks. Like a portion of my portfolio is in passive. So, I mean, it's more like a hedge against just me not being able to, get that return. I don't know, in a way. With individual stocks, like, you can completely go off. So
yeah,
it's okay to have like a portion in passive. Yeah.
Yeah, absolutely.
So yeah, that's a bit about the investment journey and education. Yeah, I did a degree in finance and then I started CFA. So I finished level 1 and then kind of found it to be not that useful because it's more of like academic finance. So I kind of left that and then just, started learning on my own from then.
Mm-hmm.
Right. Short-term, long-term goals with YouTube. To be honest, like I just kind of started YouTube because I wanted to connect with people who are interested in investing. Like, because around me, I had no one who was like interested in stocks at all. So I figured, you know what, like, let me just share my content and hopefully, I'll get some interaction and, like, it's like a whole different world in a way. I'm sure you can kind of gauge what I'm trying to say, but like, I mean, the investing world is like, it's like its own bubble in a way. And the way people think, it's different. So I think YouTube gave me a chance to get into that. So that's kind of how I started.
Yeah, that makes sense.
Seeing Tom's channel actually kind of showed me that, there is an audience for value investing specifically. And, if you want to talk about Monish O'Brien's lessons, there are people who are interested in that. So,
right.
Yeah, he's been a big sort of, like, it's like I don't know the word for it, but his channel has been quite inspiring.
Yeah, likewise. That's really what kicked me off as well. All right, let's take a couple questions from the feed here. We got what up, my homies? Dive the world. Yeah, we're chilling. We're having a good time here. What else? So Jack says, I'm feeling like Tesla will pull a Microsoft during the 2000s. So this is something Pabrai talked about in a recent talk, how Microsoft, I think he went to Microsoft headquarters. Is that right? He was trying to kind of pitch his fund to people who worked at Microsoft.
94. Yeah.
It was 94. And, he was talking about how Microsoft, it was just so expensive in terms of, where the market cap of the company was, and trying to get people to diversify a little bit. Nobody was having any part of it. And of course, you look at the chart, Microsoft, and it really has languished over, at least from 2000 to the early 2010s. Certainly we've seen an uptick since then. But
around 15, 16.
2015, yeah.
Kind of flat.
So will Tesla do that? Again, I don't know.
See, I mean, the way I think about it is right now you can see that Tesla itself is issuing new stock. So if the company is selling stock, it's an indicator, right? Why would you keep buying more at that price? If Elon himself thinks that, it's better to sell the stock, raise cash, establish optionality for the company.
Mm-hmm.
Same thing with Chamath and what they're doing with Virgin Galactic. Like, he's been selling shares, the company's been selling shares. Why are people buying into it now? I don't get it, but I think, I don't get it. Tesla.
Well, I mean, SpaceX, it's just a cool company, right? That's what we're talking about?
No,
Virgin Galactic, that's right. Virgin Galactic. Equally
SpaceX
cool.
is not,
equally cool.
The only way you can only get exposure to SpaceX, I think, through two ways that I'm aware of: by an investment through Google or through Fidelity. I think Fidelity has a certain fund that's into SpaceX. They have like a allocation. But apart from that, I don't think you can get into SpaceX.
Right. Okay. Let's take one more from the comments here. Are you both owners in SRG? Is there any point you feel would be a good entry point to add? So I own SRG. Do you own SRG, Karan?
Of course.
Yeah, of course. It's a no-brainer, right?
Hopefully, yeah. I'm getting a bit nervous. Like, no matter how good the company is, you need a CEO. Like,
yeah.
Like, it can't just run by itself.
Right, captain of the ship.
Yeah, exactly. So,
I'm comfortable with my current allocation with SRG. I don't feel like I need to add more. So I don't know what would feel like a good entry point. Do you have any thoughts on that, Karan?
One way you can think about it is, if you think that the assets are worth 2.7 billion, right? The debt, if you take that out, you still have a pretty good margin of safety, like with it trading at like 500-600 million, right? Just in terms of the liquidation value.
Yeah.
So roughly, like, I feel like anything below $20 seems interesting still. So it's right now at 14, 15 something. Depends. Like, you will not get that. It takes time. Like, you have to see how the development actually happens.
Right.
We need to see the cash flows actually come in from the redevelopment projects. Because right now it's kind of like buy it and then just wait for 1 year, maybe a year and a half.
Reevaluate.
It takes time. So
yeah.
Anything below 20 is a good price, I would say. Yeah.
Okay, great.
Although not a stock recommendation, I feel like we need to see that.
It is not a stock recommendation. No. Everyone here knows that.
Should I give you a question?
Yeah, you go ahead.
I would love to hear your thoughts about position sizing, and also which is your current longest held stock in your personal portfolios.
You want me to go with that?
Yeah, go ahead.
So position sizing, I like, if there's a company I really like, 10% feels kind of like a good allocation.
Mm-hmm.
I'd be willing to go higher than that, probably up to like 20%, but no higher than 20%. Okay. And I think, 20% is just because, I'm still fairly early in the game. I don't know, it's just my comfort level. If I was managing money for other people, it would most likely be more like 10%.
Yeah.
But 20% is something I'm comfortable with. And then what was the other part of the question?
What's your longest held stock in your personal portfolio?
Well, it's not very long. There's been a lot of, it might be just over, I guess, like a year and a half. I think Micron is the company I've held longest.
Nice.
My personal portfolio.
They had earnings yesterday, right?
Sorry?
They had earnings, right, yesterday?
Again, I missed it. I got to catch up on that. I haven't seen the...
Yeah, I haven't gone through the earnings, but...
I think, well, I read something about it, that it was positive. There's, a bunch of firms raising their price targets for Micron. But again, I don't put too much weight on that. I have to look at the earnings report. What about you? What's your longest holding?
So with regards to position sizing,
yeah.
So recently, like GameStop, right?
Right.
In the public portfolio, yeah, it's like I invested, I think, 10% of the portfolio into GameStop. But in my private portfolio, it was closer to like almost 35%.
Wow.
Yeah. So, and it's grown because since I bought it, it's gone up almost 2x, 3x. So it's become almost 45% of the portfolio at this point.
Nice.
So I'm perfectly comfortable with that. But that's in my personal portfolio, not in the public portfolio. Public portfolio basically, it's for others, like also. So there's a bit of money being managed. And I wouldn't the stock is very volatile. So in one day after earnings, like it dropped, I think like 17% or something. But with publicly managed money, I wouldn't say more than 10%, but my personal portfolio, I'm fine with even 30, 35%.
Like a third. Wow.
Yeah.
Okay.
Even more, like it's almost 50% right now. I'm perfectly okay with that.
Yeah. Right.
And if Seritage was performing, it would actually be a lot less. But Seritage is actually the largest holding. Yeah.
In terms of your buy-in?
Yeah, in terms of the amount invested.
Yeah. I have a follow-up question about that. Is there a percentage that GameStop could get to where you would feel the need to trim it?
So GameStop is a position that I'm still tracking because until March, I would say, is when we'll see the numbers really change. Like we'll see actual performance from GameStop in terms of their balance sheet, in terms of their revenues. And by June, we'll see it really taking off, like by June 2021. So it's kind of like a wait and watch. Like I'm still not certain if I'll sell out of it completely. Like I'm at some point I could see selling off maybe like 50%, and then the remaining 50% just keep it, in a separate brokerage account and just not look at it for how many other years. Like if it becomes 100 bagger, hopefully, like let it just be there. Yeah.
So you think it does have potential to be one of those long-term compounders?
It didn't start off that way. But like back in June of like 2020, I could see it being at least a 5x until now, until December, Jan. And it's come to that point. So I'm like, okay, if there are structural changes with the way Cohen is kind of changing the company, yeah, I mean, it could be like you can see what he's done with Chewy, right? So Chewy started off from zero to, it's like a 20 billion company now.
Wow.
So the guy knows, he knows how to actually make a multi-billion-dollar company from, make a retailer, an omni-channel retailer into a multi-billion-dollar company. So it's got the potential definitely to be 100 bagger. Yeah.
Cool.
At least from the price that I bought it at.
Right. Right. Yeah.
So
not necessarily the price today.
Yeah.
Let's see. Let's pull one more out of the live thread here.
I don't see the live questions.
Yeah.
Does it show up here or?
I don't know if there's a way to share that with you.
Okay.
Yeah, I don't think so.
I'll check it out later.
So just real quick. So James Esposito asked, did you have a chance to review Lumen? So you're probably familiar somewhat with Lumen, no? Because Burry holds it. That's right. I keep thinking you found out about GameStop through Michael Burry, but that's not how it came about. I took a peek at Lumen. The debt, I couldn't make it past kind of the debt level. It's a no-go if there's kind of more debt than I'm comfortable with, I just stop looking at a company. So that's what tripped me up on Lumen. It may very well be a great long-term bet. There's a pretty, I think, bullish write-up on Value Investors Club for Lumen, but I don't have any opinion about it. Let's see. Yeah, a lot of questions about SRG. It's one of my top performing keywords. So ask, can you share any rough calculation on how the 10x case would play out?
Who is this from? The question?
This is from Tanmay.
Because even I think Shashi had a similar question.
Okay.
Shashi or someone else. Yeah.
Yeah.
Anyway, yeah. Do you want to go over the SRG questions, or do you want to go over the general questions and then maybe come to SRG towards the end? I'm not sure.
Yeah, let's do that. Let's bump that towards the end.
Right.
Oh
yeah, it was Tanmay. You're right. Tanmay Shah.
Yep.
Yeah.
Let's see. Any questions pop up for you? Okay. Here, I got one. So someone asked, Marco asked, there's a quote, only the paranoid survive. As an investor, if you could only eliminate one concern, what would you choose? In other words, what risk as an investor do I wish I could eliminate? I mean,
none, to be honest, none. Let there be more risk. Let there be more uncertainty. Because that's what keeps people away, right? That's how we find the opportunities. Yeah.
Yeah.
What's worth about investing is your insight. So the value of your insight is what gives you that return. Yeah, that insight doesn't come unless there is uncertainty. So
that's right. Well, I had kind of a cheesy one. I wish I could eliminate the risk of losing money. That would be great.
Fair. Fair.
Yeah, it's really, so I don't know if you saw my recent video about SPACs, but it is so interesting to allow myself to go into this kind of niche where, historically I've looked at it like, okay, that's such a speculator realm. There is no place for value investors in this space, right? And so, I don't remember what caused it, but I had this thought like, oh, well, maybe I can play in that space as a value investor. I just have to look at it from a different angle than the majority is looking at it. I don't know why that came up, but we're going off the cuff here, Karan. There's no edit.
The SPAC video was very interesting. Like, definitely. No, I mean, it's a way to hold cash that a lot of people probably would not have thought of. So,
Right.
Yeah.
Do you see a question you want to dive into there?
There's someone who's asking me about the Moderna position that I was in. Yeah, so if anyone wants to see the public positions that I was in or invested in, they can actually go and check the entire history. So it's available. They can see the stocks that I was into, the price that I got in, got out, everything.
Great.
So that's publicly available. I have no idea what price I got out at. So yeah, it was a loss. It was a loss. Yeah.
So we got a question in the stream here. Are you still holding Micron? If so, any plan to sell? Do you own Micron, Karan?
I bought into it recently.
You bought into it recently. So I am still holding. When did I buy? I bought it at like $35. I don't remember how long ago that was. But I am going to hold that for as long as I possibly can. I see it. It just feels like a long-term compounder to me. Pabrai has talked about it as a long-term compounder. It seems like a pick and shovels play on all of these industries that are just poised to boom, require a lot of memory, right? So yeah, no plans to sell that one.
I would say like the stock is very volatile. So, if someone has maybe a larger position, I personally like to get in and out, at least in the short term, to kind of lower the cost, get a better position. So I could see maybe trimming my overall portfolio allocation at some point, or maybe adding more. But yeah, I'll be in it for the long term, hopefully.
Great.
I've
Let's
got a
go.
question here from Farhan. Farhan Siraj. Yeah. So his question is, what are the tools, resources, and websites that you use in order to find a potential multi-bagger stock and evaluate the above mentioned stock apart from reading annual reports and news? So how do you find your stocks and how do you analyze them, basically?
Yeah. Well, my favorite way to find stocks is to look at what great investors are buying.
Yep.
That's my number one way. I should probably just stop there. I should probably just, I mean, it's so easy to go down all these rabbit holes, right? But, you know, I look at the magic formula. I look at the acquirer's multiple. There's a number of places I look. The high short interest is really interesting to me, the site that you recommended. So yeah, those are some of the places. Yeah. How about you?
But with each of these methods, like, you have to still drill down into the business.
Yeah.
Like, you saw a lot of great investors buying into Alibaba recently, and a lot of them have started establishing a position. But the way a hedge fund would invest versus us as retail investors is like completely different.
Right.
So they've got that asymmetric return that they have to get to deliver alpha, right? And their portfolio allocation, like, you know, like, I think you check like how much of a conviction, how much conviction do they have? I think that's one of the screeners that you use, right?
Yeah.
When allocating. So I mean, yeah, all that makes a lot of difference. So you have to see what are the really high allocation, high conviction, you know, allocations into these super investors portfolio. I wouldn't even like look at the other holdings. I would just look at the top 5 holdings of super investors.
Yeah.
See if I can get those at reasonable prices.
Right.
Yeah. So like, I have one individual stock investment in India, which is Suntech. And Suntech, Pabrai bought into it in 2016. Like this year in March, it came back, you know, like not like almost at the same price at what it was in 2016. So I kind of waited, and then 4 years later, like, it's come to the price, and it's done pretty well since. So.
Oh, that's such a powerful thing to be able to do, Karan. To know what you want to own and have that patience to strike when it hits. So good.
Absolutely. It's what actually gives you the true long-term outperformance. Yeah.
Yeah. Yeah. Alibaba is very interesting. Have you bought any?
No, I told you I was into Pinduoduo, which is the company that benefits if Alibaba is impacted. Yeah.
Gotcha.
And that's done quite decently, especially in the last month.
Yeah.
It's up almost 30-something%. Yeah.
Cool.
Sure.
Let's see. So yeah, do you have one?
No, go ahead. I mean, if you have a question.
So I have one. What is one insight you achieved recently? I assume it's an investing insight. Well, for me, it was really the cash thing. Like, I don't want half of my portfolio in cash. And, you know, as the cash has been piling up, as I haven't been finding things, you know, that's the position I found myself in. And so, you know, I just love the insight I got from Pabrai about hunting for this upside without downside and his investment in Silicon Valley Bank with the warrants. It's just, and, you know, we're kind of seeing that, I think, with what's happening with the SPACs, with that cash floor. So that's an insight. The insight was I can play in these arenas that feel like kind of there's a lot of speculation, but I can protect the downside. So I can kind of be dancing at the party, but know that there's protection. So that's a pretty fun situation to be in.
That's it. It's Chamath, right, from CNBC. Yeah.
What's an insight you achieved recently?
Recently, I think it would have to be that, cut 50% of the position when it hits your expected value, and leave the rest if you think it's 100 bagger. I'm learning that with GameStop now. So hopefully, I think doing that makes a lot of sense, because it's difficult to hold a stock for 10 years. It is. That's, I think, the most difficult part about the investing process. Once it hits your value and you say, okay, I'm out, being able to keep a portion of that aside is important.
Yeah.
So that's an insight, like keep some of it away.
Yeah.
I don't know if it'll change over time, but for now, that's a thought. Yeah.
Great.
I
got
really
one.
like the stack idea, though. I still like it's still like I'm still processing it.
Yeah.
But it's pretty interesting. Yeah.
Yeah. And it's not my idea. I was poking around a corner of Berkshire and Fairfax, and
right.
I discovered it there. It's such an awesome message board. So Jack, my buddy Jack, asks, outside of REITs, do either of you own any rental properties, any real estate? I do not. Like I said, I started in real estate investing. I did a wholesale deal in Oakland. It was like a burned out triplex, didn't have a roof. But I wouldn't say I ever owned that. But I'm not opposed to real estate. I actually see myself investing in real estate down the road. I have a good friend of mine who's looking at cash flowing rental properties in Memphis. And the numbers are pretty compelling if they're actually true. It's really important to do your due diligence, make sure it's in the right neighborhood, all of that stuff. How about you? Are you in the real estate game?
So when it comes to real estate, I kind of feel like the time to buy is when interest rates at like 6-7%, kind of like what it was in 2006, 2007, because that's when it's expensive to borrow. So those with cash are able to secure like better yields on return. And then as interest rates fall, you get appreciation from the property values in a way because of all the excess money that's in the system. So at the moment, no matter how low mortgage rates are, I personally, would not be interested as such. But as interest, like I would rather invest in individual companies and then let cash grow, and then just go outright and get a property in cash. That makes more sense. You get a better yield overall, and you have a lot more control when you just buy it outright, as opposed to, I get it, like a lot of people like to use mortgage and debt, and when they're building their portfolio, especially in real estate. But to me, it just makes more sense to buy it in cash. And there's no rush, right? You don't have to get a property when you're at this age. You can get it later also at any time. So
yeah, I'll throw out something a little contrary to that, and that is, I learned about this concept called inflation-induced debt destruction, where so you borrow money to buy real estate. So say I buy it in 2020. Now the loan on that I'm paying back in 2020 dollars, right? The loan is fixed. So as the dollar undergoes inflation, that debt is becoming cheaper and cheaper to me in real dollar terms. So, considering where we are in terms of how much money printing the US is doing, there's a case to be made that we could be headed for increased inflation, which may even offset your whole interest argument. But, that's all just a thought exercise.
There's no way to predict what inflation will be like. I mean,
it is hard to predict.
Maybe it'll be
impossible to predict.
Yeah. So I like the quote from Sam Zell. I don't shop markets, I shop deals. So I and he knows a thing or two about real estate. So
Yes, he does.
you pick the deals that make sense to you, which is kind of what we do in stocks. So
Did you happen to see his recent talk from last month?
no, I've been reading his book though. Yeah.
Okay. Yeah. I posted it on my my community tab. It's fantastic.
I'll be sure to check it out.
Cool. Let's see. Why don't you pop out a question there?
So got a question from Jasmine. I've seen that individual stocks like Nike and Nordstrom are mainstream fashion-centric stocks that individuals often invest in. As someone who's interested in this industry and ETFs, are there design, art, or fashion-related ETFs that I could look into? More importantly, is the industry worth investing in? Any thoughts about the fashion industry?
I have no thoughts. I don't. That is not my circle of competence. Let's put it that way.
With regards to, I think, luxury, so I mean, the biggest company is LVMH, right? Bernard Arnault. Is that how you say his name? Bernard Arnault.
Bernard Arnault. Yeah, I don't know how you say it.
Yeah. So there's a quote by him where he says that, you get luxury margins in luxury goods, basically. So I think it's definitely an interesting industry.
Yeah.
Yeah, and you have basically the Berkshire of like luxury goods with LVMH. So if someone was to be interested, like I think that's kind of the best place to look. And if you can get it for the right price, definitely a good long-term investment.
Yeah, I think I came across Revlon not too long ago. I don't know how I saw it, but it might have been on the Magic Formula.
It's high short interest.
It might have been high short interest.
Yeah.
And it just seemed like, I think there was a write-up in Value Investors Club. It seemed like there was potential there, like it had gotten beaten up. So that's one to look into if you're interested.
Even Estee Lauder, like they're into. Yeah.
Okay.
There was also another company account. Elf Beauty, was it? I remember Jeremy from Financial Education was talking about.
Which one?
Again. Elf. I think it's
Elf. Yeah. Okay. Yeah.
Yeah. No, interesting space, definitely, with the margins that they have, and the way social media kind of promotes beauty products and everything. I mean, if it's in some circle of competence, you can probably make a lot of money on that.
Yeah.
So, but it's not a no-brainer, at least not for me. Yeah.
So here's one from the feed. Is there a way to get notified when a 13G is filed? So the 13G, that's, when an investor comes in and buys, what is it, more than 10%? They have to disclose kind of within 10 days of the following month. And then I think it's more than 5%. There's a certain time frame they have to disclose.
Once they cross the 10% threshold, they have to file every time they make any transaction.
I see.
Yeah. I don't think there's a way to get notified unless you like track the company and have notifications about that certain company. Not that I know of.
Yeah, I don't know of a way either, although that would be handy. I would definitely set that up if there were a kind of a free way to do that. But I'm not sure what that is, if there is one. I just occasionally jump to Pabrai's 13, his SEC filings, and okay, has he done anything recently? We should be more tech savvy, Karan.
I'm very happy not being tech savvy.
Oh, good.
Yeah. Like even in my personal portfolio, there's no direct tech investment. Yeah. I think even Pershing, which Pershing has no tech investments. I mean, of course, you can argue that Lowe's is using technology to better their business, but it's not a direct tech play.
No.
It benefits from technology like most businesses do, but
right.
And Blackman has gotten like 70%, 60-something% this year without tech. So you don't need to be tech focused to do well, I think.
And without those credit default swaps paying off, I don't think they paid off the second time, did they? At least not yet.
Not yet.
Yeah.
Hopefully they don't.
I'm kind of hoping they do.
It's just a 1% allocation, I think, of his total.
Yeah.
Yeah.
So a
Are you
question.
in Dogecoin, by the way?
Sorry, I bought in recently. Yeah.
PSTH or PSH?
I did the sneaky the SPAC route.
Okay.
Yeah. Even after watching your video, Karan. Question: when to get out of a stock and how to best monitor when gurus get out? When to get out of a stock? That's a tough one. That is a tough one. What are your thoughts on when to get out?
So I feel like if you've done your analysis, your thought process correctly, you'd figure out when you're getting out before you're getting in. So
you figure out when you're going to get out before you get in?
Yeah, definitely. I mean, you have to have some price in mind, because eventually it's the price, that dictates.
Right.
Like you may have a value of whatever, some amount.
Yeah.
And once it hits that price, okay, if that intrinsic value has changed, that's great. But if not, then, stick to it, sell out. Yeah. I feel like discipline is really important.
Yeah.
When investing. Yeah. So getting out is not an issue. Such.
Yeah.
I know Bryce mentioned that he's had problems, with selling the stock too early. But I mean, I'm sure there are a lot of stocks that he got out of that, eventually didn't do as well. But
He's definitely gotten out too late as well. I know on several occasions.
Yeah.
Yeah. And, to some extent, it's just part of the game. But I like your answer there. Know at what price you want to get out. And then when it gets to that price, take a look at the business again. See if the intrinsic value has changed. If it hasn't, you're out of there.
Yeah.
Yeah.
Recently, I had Nordstrom in the portfolio. And at 11, I'm in. Right? 11, 12, I'm buying up as much as I can, like in the public portfolio. And once it hit that $30 price, I'm out of here. Like, I don't need to see it go to 40. It can definitely go to 40, 45, even 50. But my price was 30 and I'm out. Yeah. So no regrets there. Like, absolutely.
So going back to Tesla, when you sold at 400, what dictated that you sell at that point?
What do you mean, what dictated?
How did you decide to sell at 400?
Because it made no sense. Like, it's like, okay, it's all based on fluff. Like,
yeah.
I mean, I believe Elon when he says that, we will deliver Model Y and Cybertruck, and the Model Y is going to outsell Model X, Model S combined. And I hope it does that, Like, even when I look at ARK's portfolio, you see majority of the companies are losing money, and they encourage that. Now, how sustainable is that model? I have no idea.
Yeah.
Right. But at some point, you just have to get out. I would rather be in equity commonwealth, like it's all cash. And that'll help me, know what am I buying into? Like, there's a base to that. I know we'll discuss equity commonwealth at some point, maybe not in this video, but
sure.
Yeah.
There was a question about ARK. What do we think of ARK? Did you see Sven's video on ARK? I don't know if you follow Sven Carlin at all.
Yeah. Which one? The most recent one? Or
the most recent one, yeah. Yeah. Not very bullish on ARK, which, I thought it was well thought out. His his thoughts on ARK. Yeah, I don't have I'm curious about ARK. I haven't really gone there yet in terms of learning more about it. I chose Chamath first. I'm kind of like just drinking the Chamath fire hose right now.
Sure.
But maybe I'll get to ARK next. Have you spent? I mean, it sounds like you've looked a little bit, and all the companies are losing money, or most of them are losing money.
Most of them,
yeah.
But with ARK, again, yeah, he's right. It's about the flows. Like, they pick smaller companies. Right. Once people know they've gotten into them, they enjoy that nice pop of like 20-25%.
Right.
And that boost, they keep doing that, and that keeps boosting the. But saying that, the companies that they are investing in, I really hope they succeed.
Yeah.
Because they're companies that are really trying to, make, like change humanity in a way.
Right.
Whether it comes to gene editing or
Yep.
climate change, all are big trends in a way. So I hope the companies succeed. But as an investment product, doesn't entirely make sense to me.
Right. Yeah.
Like their hedge fund, they have a hedge fund that's, apart from the ETF, they have discretionary funds with ARK, where like accredited investors can invest with them. And that has like a 7% allocation into Bitcoin, right? So people who are invested in the ETF aren't really getting the full benefit of what I guess ARK has to offer, or what the entire, the highest conviction ideas are. So
Yeah.
I don't know, the ETFs seem like it's good, it's like there, but the discretionary fund, if someone was to invest with ARK, the discretionary fund is the way to, but that's not available to everyone. So.
Right. Right.
But interesting company, interesting investments, but not for me.
Yeah. So I've got a question from Mind Potential. He asked it twice, he or she, I should say. What is one stock you can buy today and leave for your children? And then just a caveat. So, and of course, I had thought of that. This is what I was going to answer. Mind Potential. He said, "Don't say Berkshire." So I'll have to be a little bit more creative, I guess. Does anything come to mind for you, Karan? While I buy myself a little bit more time. What's that?
With an ETF.
It says stock.
Stock. See, there aren't many companies that last like 20, 30 years.
That's the hard thing.
So
the corporate, business durations are dropping pretty quickly, it seems like.
I'd probably, I don't know, say something like Nestle or something. Like something that's really, it's like, yeah, maybe like a Nestle if it's the right value.
Yeah.
Like they have moats, they have real moats that, or even like a Johnson & Johnson, but Johnson & Johnson is very, I think the valuation is. But yeah.
Right.
What about you?
God. If I were forced to buy a company that I had to hold for 20 years, I'm trying to decide between Costco, even though it's so expensive, and Amazon, which is even more expensive, like ridiculously expensive.
Isn't that investor's portfolio, the three stocks, Amazon, Costco, and Berkshire? I forgot who's the investor.
For who?
There's some investor that Brad mentioned. He just had like three stocks.
Oh, yeah. Was it Amazon, Costco, and okay. Yeah,
is that a coincidence? That just happened to be.
No, maybe it's sunk into my subconscious there, and it's a part of me now. Yeah, if I had to pick one, I guess I would say Amazon.
Okay.
But I would be very upset paying today's prices. That's a caveat.
But Amazon's always seemed like it's valued rich. Like even if you look
You're
at
right.
50 years ago, yeah.
You're right. What percentage of your portfolio is in cash right now? For me, it's about 50%, assuming the SPACs that I'm kind of parking the cash in are as good as cash. How about for you? What are you in cash?
Not much, to be honest. Yeah,
Uh-huh.
maybe like 5-10%. But cash keeps adding on, right? So on a
Right.
monthly basis, it keeps growing. So
That's good. You've got the cash machine turned on. It just keeps coming in, Karan.
yeah, I'm waiting for YouTube to work out so that.
Well,
Yeah.
you've hit the first metric. I want to take this moment actually. When did you break 1,000 subscribers?
When
Was it
couple of days back,
yesterday? A couple
4
days
days
ago?
back. Yeah,
Wow.
4 days on the 5th.
Congratulations.
Thank you.
That's awesome.
Yeah, it's taken like 7 months, but
7 months.
I think it took you 3 or 4. Was it?
Well, I had made videos before that.
Hmm.
That was when I really started seriously like making a video every day. It took 3 months to hit 1,000 subscribers. And then another month to hit the 4,000 watch hours, which now is what you're targeting.
Yeah, the extra month it's annoying, but just keeping my head down, posting videos.
Oh, it was annoying. I remember it very well. But it'll go by fast.
Hopefully. There was a question.
Yeah, go ahead.
Books.
Books.
So what books are you currently reading? And yeah, what is the first? Yeah, do you have recommendations? That's another question.
So yeah, there's a book.
So what books are you into now?
There's a book I've been reading on Audible called The Psychology of Money. And it's by a guy named Morgan Housel. And he's on Twitter. He's pretty active on Twitter. But it's a fantastic book. I love just the clarity with which he writes. Just about, all the psychological influences of growing your wealth. I was hesitant to buy it and to read it because I'm like, the psychology of money, that sounds kind of boring. But it's really interesting. Like he brings in a lot of stories to make the points throughout the book. And one of my favorite ones, he talks about how, back when Charlie and Warren, I think maybe it was when they were buying See's candy. There was a guy that was kind of on the same level as Charlie and Warren. It was Rick Guerin. Have you ever heard of Rick Guerin?
Margin call, right? And have to sell it.
That's right. Yeah, he got a margin call and he had to sell Berkshire at like $40 a share or something. But anyway, he's written up in the Investors of Graham and Doddsville as one of the top performers, right? The problem with Rick is he was in a hurry to get rich. Charlie and Warren, they knew they were going to get rich, and they weren't in a hurry. They wanted to do it in a way that, they're following rule number 1, right? Don't lose money. Do it without all the leverage, right? The speed. And Rick, he didn't have that self-restraint. But it's just a fantastic book. So check that out. Yeah. How about you? What are you reading?
When it comes to investing, like I get it. Like people are into like futures, options, leverage, all sorts of things, right? But sometimes it kind of works for them. So I mean, value investing might not be for everyone, and that's perfectly okay, I think. Yeah. I feel like using leverage may not make sense to a lot of people, but to some people it makes a lot of sense, and they can do really well with it. So yeah,
fair enough.
Yeah. In terms of books, like I was reading Am I Being Too Subtle? Sam Zell, trying to break down the mind of Sam Zell, like trying to get better idea because of, again, equity, Commonwealth. But yeah, also I've ordered Jack's book, The One Property Retirement, that he has written, Jack Dudley. Yeah, so I wanted to just read his book because I'm like, he seems like a interesting guy. At 23, he's got a book out. So definitely I want to see what it's about. So I've ordered it from Amazon.
Awesome.
We should be here in a month. Yeah.
Hopefully he's still listening. He's probably studying for his bar exam.
The guy is killing it, like for 23. Yeah.
Any more questions on your end from the video comments?
I've got one. Do you have recommendations for out of North America stocks? Any European or Asian stock picks? Any strategy to trade the threat of Brexit without a contract between GB and EU?
You know,
so how would you trade Brexit, basically?
I went on a little kick of looking at stocks outside of North America. And I just realized, it's hard enough to fully understand businesses where I live in the US. I'm not there yet. I'm not ready to do the Pabrai thing and start visiting, headquarters in Turkey and South Korea and all that stuff.
Yeah.
And because I'm not running as much capital as Pabrai, I mean, I'm getting there, but I'm not quite there yet. I can I can fish in ponds that he can't fish in, right? I can go small rather than having to go abroad. So, and I think that's the smarter play for me. So that's where I'm at with investing outside North America. But you are in UAE, so maybe you have some insights about Europe. I realize UAE is not in Europe, but
Middle East. But I'd rather not talk about the UAE market as much. But with regards to the European market, there are definitely some interesting opportunities. Like I'm currently into Gazprom, which is in Russia, like the Russian gas giant. So fantastic. I mean, business. It's got a lot of potential, a lot of margin of safety. But I mean, in terms of the European stocks, I would say like at some point in a few months back, like the airports were quite interesting.
Sven was big into those too, wasn't he?
Yeah. So that was pretty interesting. Like from his video, I kind of got into it, and I didn't buy into anything. But Paris Airport, ADP is a stock ticker. Pretty interesting.
Yeah.
So, and even like if you look at the like the baggage handlers and everything, like there was a company, John Menzies, that was quite interesting. Yeah. So not directly airlines, but airports and baggage handlers. I didn't buy into them, but that's because there was other opportunities that made more sense.
Right.
But those were definitely interesting, and they've done, I think, pretty well. Like ADP, not so much, but the other stock, John Menzies, it's done pretty well. Yeah, it's been cool. 2x. But that's pretty much it. Like nothing Brexit specific, more like if opportunity comes up, it's interesting. But yeah, that answers the question.
Yep. Just run through a few more in the feed here. Google's Minds Potential asked about Google. I love Google. I would love to own Google. When the next correction happens, I have a pretty good feeling I'm going to buy some Google.
Okay.
Where are you at with Google?
It's so vast. Like it's too big. Like, I mean, not for me.
Too big.
I love Google. Like I have a Pixel myself, and I love the whole Android ecosystem, everything. And but as a stock, I think like we can find better returns with smaller stocks, with more uncertainty, with more volatility. Yeah.
Sure. Okay. You got a congratulations on 1K, Karan, from Alaki.
Thank you.
Quick question. Sorry?
Even she had a question, Alaki. Yeah. Sorry, you were saying?
Did she have one that we didn't talk about yet?
Yeah. So you want me to just say that?
Sure.
Yeah, I had a question regarding holding or selling stocks. How do you know it's the right time to sell a stock or trade without having to kick yourself in 6 months for having sold it? How much profit is enough profit? Is there a specific ratio or rule of thumb with this? So that's kind of similar to the previous.
Yeah.
Yeah,
we kind of touched on that earlier. Question, how do you park your cash? So watch the last video I did talking about SPACs with Chamath Palihapitiya.
You got the name right.
Palihapitiya, I've been practicing. It wasn't that hard. I was reluctant to say it for a while. Brad, where are you located? I'm in the San Francisco Bay Area in Oakland. No plans for meetups at this time, but be interesting to do sometime in the future. Thoughts on
I've got a good question.
Sorry?
Got a good question.
Yep.
After a bad investment, how do you pick yourself up?
That is a good one.
It's from Cybersonic Kid.
Yeah. How do you pick yourself up? You want to take this one first?
I mean, with the public portfolio, again, I kind of, in the short term, like know when to get out. Like I do set stop losses. I know that Pabrai said that, if you're value investing, you don't need stop losses. But again, with that portfolio, there are other people involved who might not have the stomach to handle a 50% drop.
Right.
So unemotionally, you cut it. Because like I go back to that quote, but again, Pabrai has mentioned that, if wealth is lost, nothing is lost, health is lost, something is lost, character is lost, everything is lost. Yeah. So if money goes down, like if your returns are lower in one investment, you've lost nothing pretty much. So
right.
Yeah, it's not emotional in a way.
Yeah. Yeah. One thing that really helps me is one of Pabrai's 10 commandments. Thou shalt be wrong 1/3 of the time.
Right.
So, it's about having enough bets. So if any one bet goes wrong, it's okay. Right. And, there's so much value in the learnings that happen when a holding that you own goes down, right? Because it hits you in the gut. And it's like, okay, what do I do with that kick to the gut? And the best thing you can do is try to figure out, if there were mistakes, what were those mistakes that you can learn from? If there weren't, it's a probabilities game, right? They're not all going to work out. So
absolutely. Yeah, I think if you have like probabilities set up with each scenario, even if it does go into that, the 20% probability that, it is going to crash, you accept, like if you anticipate it, like, I don't know, for me, maybe it doesn't hurt as much anymore, like hurt. Like it doesn't ruin my day. Like, okay, big deal. I'm down on one stock out of, currently I've got like 4 in the portfolio. So if I'm down on one, it really doesn't ruin the day.
Right.
Yeah.
Good. Okay, I think we covered that one pretty well. Any more from your side?
How do you overcome FOMO in the current market, especially in tech
FOMO. Do you have FOMO? First, let's address that first, Karan. Do you have FOMO? Do you get FOMO?
Maybe only with Tesla a little bit.
Because you owned it. Yeah, that makes
a little bit. But like there's this quote from Munger that, if someone else gets richer faster than you, that's not a tragedy. Like exactly. Like so it's okay not being in tech stocks. It's okay. Right. Yeah. At least I've come to that point to some extent now. How about you?
Yeah, what does Buffett like to say? Envy is the worst sin because you don't get to have any fun.
Exactly, yeah.
How do I deal with FOMO? Well, one way I deal with it is to try to get involved somehow in the hype realm of the investment world with the kind of heads I win, tails I don't lose much opportunities. Okay. Sure. So there's angles to take where you can protect your downside and still, like I said, dance at the party. So that's been a fun one for me to discover recently. But FOMO, I mean, it's tough. It's especially tough if you're paying a lot of attention to what's happening in the markets. It's less tough if you're doing kind of the things that are helping you become a better investor, like reading, like, learning, not just watching what prices are doing, but learning about actual businesses. So that would be my advice to avoid FOMO. Learn about businesses that you want to own rather than watching prices run away on companies that you don't know much about.
But even, I mean, like, again, like some people, you can always, I know it's not something a lot of people who believe in value investing practice, but you could trade tech. Like, I find that to be perfectly okay thing to do. Like, even Buffett himself, when he started off, he was using a lot of technical factors, right? And he moved from that to following like the Graham approach, and then converting to Munger's approach. So that's been over like 50 years. So, if you've got FOMO, you can possibly have like 2% of your portfolio allocated into trading. Like maybe that's actually something someone's good at, right? Maybe they're not suited to be a value investor. They might be trying to become a value investor, but maybe they're more suited to trade. So I'm like very accepting of all methods to invest. I think Buffett put it like there's more than one way to get to nirvana.
I noticed there's this part in me that's like, no, Karan, I want to like push back against you.
No, because like you see,
that's
Lynch,
that's the part I need to look at. Yeah.
Yeah, like Peter Lynch, he was so diversified, right, with his Magellan fund.
Right.
He still performed fantastically. Like his returns are incredible. And like people have used leverage, people have traded. Like you have to try a few things, kind of figure out how you are as an investor.
Yep.
Yeah.
Know thyself, and the only way to really do that is to try a bunch of stuff, right? See what fits.
You don't have to stick to one way and be like, no, value investing is the only way.
Totally.
If it comes from within, it's more impactful in a way.
Yep.
Yeah.
Great. Well, that feels like a great place to wrap things up. But before we go, Karan, I just want to give a big thank you to you, a shout out to your channel. Go to Karan's channel, watch his longest videos because he needs the watch time, guys. He needs the watch time. Any final words for our audience here, Karan?
Well, actually, thank you for having me on your channel.
Sure.
It's been the first live stream that I've done.
Good.
Hopefully, people really liked the live stream and kind of got some value out of it. Yeah.
Well, I know. I enjoy doing it. It's fun to
really
do.
liked it.
Yeah. All right.
I remember the last Zoom call we had was like literally it went by. Even now, like 1 hour's gone by, and it felt like it went by pretty fast. Yeah.
Agreed. This is fun. We're both geeks about this stuff. This is what we do for fun. So, all right, sounds good, Karan. Well, I will see you. I'm sure soon, and as for the rest of you as well, stay safe out there. And
take care.
Yep. See you next time.
Okay.
Bye.